Hello and welcome again to Charles Kelly. This is Charles Kelly Money Tips. I hope you're having a great day. And welcome to everyone who can join me on Facebook Live and on my podcast, which is on iTunes and Stitcher, called Money Tips. You can also find a link to it on my website, moneytipsdaily.com. So today I want to talk about where you would go if you need short-term money. Like, you need a few £100, you need £1,000, you need, your boiler's broken down. Well, the best place is to have the money in the first place, right? And this is what I write in my book, Yes, Money Can Buy You Happiness, that everyone should have a short-term savings bank account where that money is there, literally like a bank of money that you can fall back on. And everybody should be saving at least 10% of their net income. Now, I've gone through this on previous episodes, and people think it can't be done. Well, it can be done, and if you look at some of my previous episodes, you'll find out how to achieve that. But assuming that you haven't got that money, then what are you left with? Now, people who've got access to easy credit, often the people who don't really need it. Like, if I needed money right now, I could get some money on my credit card. I could, probably pretty easily raise a personal loan. Every day I'm getting letters from credit card companies saying, would you like to increase your credit limit? Would you like a loan? Would you like, it just comes to you. But obviously when you need it, then the banks don't want to lend to you. So for the people that are not in such a good financial situation, the people maybe haven't got a very good credit record, then they're really in trouble, because then they're left to go to sometimes the worst of all are the loan sharks, the illegal lenders that can charge you interest rates of 1,000% or 2,000%, even more, and then you have lenders like the high street payday lenders, where they'll cash checks for 5-10%, immediately, or pawnbrokers, where you can pawn your stuff. I assume you all know what a pawnbroker is. These are the shops in the high street that have the 3 golden balls hanging outside, pawnbrokers. And to pawn your things means to give them to the pawnbroker, and they will give you a loan against that money, or they will just buy it from you. So typically they want things like gold rings, coins, silver coins, gold coins, that type of thing. But it could be cameras, it could be even things up to like cars and things like that. They'll buy classic cars. So you can pawn just about anything at a pawnbroker, anything of value that can be turned into cash by them. And then you would leave that item with them. They would have a hold on that item, and you'd pay them interest to get that item back. If you don't come back, or you can't pay them back, they can then sell off your item. So a pawnbroker would also be a shop selling jewellery, gold, coins, and that sort of thing. And then you've got cash converter type places. These are, I suppose, glorified pawnbrokers, where people sell off their stuff that they don't want. And we've all got stuff in the house, and we've all got exercise bikes that we don't need, guitars that we were promising we'd learn how to play, cycles, kids stuff, all sorts of stuff, electrical stuff, cameras. And people go to these shops and sell them off for cash, and then the shops sell them on for a profit. And they also do these payday type lending. Now, the reason the reason I mention this is that a large pawnbroking firm, the H&T Group, has revealed that the FCA are reviewing their short-term cash loans, which I imagine are so expensive. That this is why they've had to step in, or they've had some complaints. And the boss has said, well, if we stop doing these cash loans, people will have to go to loan sharks, which could be true, because obviously people with bad credit, people who haven't got proper jobs, the banks are not going to touch them. They're not going to give them cheap credit. And so that, unfortunately, a lot of people are forced to go to pawnbrokers charging high interest rates, or even worse, loan sharks, illegal lenders that charge you thousands of percent a year and will break your legs if you don't pay, or certainly intimidate you. And so this is the problem we have. And a lot of people can't even get proper bank accounts in the UK, because the banks don't really want them, frankly. They're not going to be profitable to them. And yet the banks have created an environment where we're almost in a cashless society now. You can barely function without a credit card or a debit card. most buses won't accept cash anymore. A lot of places just won't, so if you're, the type of person that hasn't got a car and you rely on public transport, you need some sort of card. Otherwise you can't even get on a bus. So what's going to happen here? Well, the FCA are reviewing their loans, and the regulations will they'll decide what they're going to do. In the meantime, this store has stopped giving out short-term loans. However, the pawnbroking side of the business, the typical pawnbroking where you exchange goods for money, that will continue. That's not affected, although as I said, they can be very expensive. They're giving you bottom dollar for your goods anyway, and if you're taking a loan against it, the rates can be very, very high. A lot of people don't think, they think I'm only paying 10%, but if you annualize that into an APR interest rate, if you're paying 10% for a day, that's hundreds of percent over a year. Or if you're paying 1% a month, that doesn't sound much, but 1% a month compound is not 12% per annum. It's working out a lot more because it's compounding as you go along. Credit cards are the same. 16% is not uncommon when base rates are like 0.75 or 0.5%. They're charging 16 times the base rate to give you credit. So that's why they're making a fortune. So pawnbroking is unaffected. And incidentally, this group bought a pawnbroking firm called Albemarle Bond when they collapsed last September. I don't know why, but they bought £8 million worth of their loan book, and these are what they call pledge books from Speed Loan Financing, which are traded under the name of Albemarle Bond. So it's very unusual for a pawnbroker to be affected by things like a recession, because they tend to do very well in a recession and in tight times. And this company, in the past 6 years, the company's total customer interest payments, these are on these short-term loans, were 24 million. This is not a huge company. This is a company most people have probably never heard of, but they're making a lot of money. And I've seen pawnbrokers in the high streets for years and years and years, and they very rarely go. They come, they stay, they're doing okay. They're not rushed off their feet with customers, but when they get a customer in, they're making money. And a lot of people have fallen back on pawnbrokers over the centuries, really, because it's a traditional way of raising money where you pawn your jewellery. So, the answer is if you need short-term money and you're in a desperate situation, certainly don't go to loan sharks. Try and avoid the pawnbrokers and the cash converters, and instead look at credit unions in your area. Credit unions are usually not-for-profit organisations, and they can help out with short-term finance, or go and see the Citizens Advice Bureau or your citizens advice, or take proper financial advice as to how you might want to maybe restructure your finances and your debts. Because if you're in debt and you're running around borrowing from people to pay debts off over here, so you're robbing Peter to pay Paul, you might be borrowing. You've got a loan here that you can't pay at 10%, and you're borrowing at 24% short-term money just to make the interest payment on that loan. Well, that can't last. That will just compound the problem, literally. So you might want to go and see a citizen's advice or someone at a credit union that can perhaps help you reorganise your finances so that you're not in that desperate situation. And you can come to arrangements with creditors. You can say to them, look, I can't pay you, let's come to some arrangement. You can do that formally through formal arrangements, or you could do it informally through the citizen's advice. You can go into an agreement. It's not bankruptcy, it's a step before you go into that more drastic stage, but it's just coming to an arrangement with your creditor. It's a voluntary arrangement, if you like. So you can take those if things get really bad and you are really desperate, and that could relieve the pressure if you've got into too much debt. I mean, the average savings in the UK is only around £5,000, but the average debt is much higher. People are carrying a lot of credit card debts nowadays, and if you lose your job or your hours are cut, it can quickly mount up. That problem can quickly mount up, A final thing to remember is if you are in debt and problems, make sure you pay your essential things like your rent, your utilities and power and that sort of thing. Those are the essential things you must do and must pay to keep a roof literally over your head. But they might not be the people shouting the loudest. The people shouting the loudest might be the car finance or the company that's giving you a short-term loan, and they're really putting you under pressure. But the priority might be to make sure that you pay the things that keep a roof over your head and those essential things and keep your power on. But as I say, if you are in that sort of situation, try and take advice, get advice from someone, usually from the Citizens Advice. This is in the UK, of course. And if you do need short-term money, look at credit unions rather than going to pawnbrokers and loan sharks and these sort of companies that will inevitably charge you much higher interest, and you'll end up losing out. So thanks very much for listening. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Thanks for those people who've tuned in on my podcast and on Facebook Live. Thanks very much. And just say hello to some people there. CJ, Tracy there. Hi, Tracy. And I think we had Errol, Anthony. Thanks for listening. And I hope this has been useful to you. And I hope you're not in a position where you need to go to loan sharks. But the real secret is to follow what I've written in my book. And that is to have some savings behind you so that you don't need to go to these drastic measures. Obviously, another way of borrowing, I suppose, is to go to friends and family to tide you over. I know it can be sometimes you feel ashamed doing that, but it may be the only way you can get out of a hole. But in the UK, there are laws governing this. There are laws, the Consumer Credit Act, there are laws governing people who might just be unable to cope with their debts, and then they can go into voluntary arrangements, IVAs, individual voluntary arrangements, or they can look at bankruptcy as a last resort. But at least bankruptcy wipes out your debt and then you start again, you start from scratch. But obviously if you have assets, the bankruptcy courts will take those assets, and it could even mean your home as well. So do think about that before you go. And there are consequences to pay because, forevermore you'll be known as a previous bankrupt. It will be very difficult to get credit and that sort of thing. So anyway, that's all for now. Thanks for listening. Thanks for tuning in. Great to see you. Great to see your comments. And if I can give you any help on anything, just do drop me a line. Thanks very much. And good night. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Have a good evening.